Good morning, everybody. It's Chris from Serene Education with the 4 major zones update for the 17th of January 2014. End of week, guys. Okay, let's have a look at the 4 majors, starting with the Euro against US dollar daily. Let's have a look and see what happened yesterday and what's likely or potentially likely to happen today. What we've seen recently on the hard right edge is price has been falling drastically since that 61.8 monthly fib level was attempted back in the latter part of December, early January. We haven't been able to attempt those highs since, and you can see the indicator box here primarily telling us we are seeing that negativity, which has pretty much taken us away from those highs. Long-term sentiment is still very much up. The candlesticks haven't changed color at all, so the bias is still for upside for Euro against US dollar. However, we are seeing a pronounced consolidation period for Euro, and the longer this continues, the more likelihood is it's going to start eating into our daily and weekly sentiment, which will then look more negative, and price could very well attempt the lower lows that it has come from since November and September of last year, in fact. So RMO dropping as prices consolidated, and the OSMO indicator has been below the zero level as we've gone into this consolidative range. Clearly here you can see price is consolidative around a prior support and resistance level, a weekly support and resistance level, and at the moment now, after the Wednesday bearish engulfing candle, the sentiment at the moment now looks more favorable for negativity. The intraday sentiment is very much negative, and the R squared is complementing that negativity. So if we drop down to our 4-hour time frame, straight away on our 4-hour time frame we get a sell signal. However, you can quite clearly see we have not seen any candles, or the 4-hour candle closing low in this consolidative range. And if it's not closing low with sentiment, then there's less likely for price to be more directive in its approach, i.e. lows. We do have everything in our favor. However, we have a red arrow, red candle, and all the moving averages, including the most important one, the institutional moving average, is above price. The only thing we have here that's not in favor is we have a consolidation support level here at roughly around the 1357 and change. So we would need to see a nice bearish engulfing 4-hour candle close. You can see on a number of occasions a 4-hour candle actually traded lower than this level, however failed to close, and subsequently what happened was price actually consolidated and we saw a slight move higher. The institutional moving average still capping price, so still keeping our head below water level. So the sentiment still wanting to still one of consolidation but negativity. So here, if to be genuine negativity, we would need to see a bearish engulfing 4-hour candle close lower, which will tell us that the sentiment, especially with the big guys, is moving further low. And if that's the case, then we can target our 50% monthly retracement level, which is below us, and that's a healthy 90, just short of 100 pips below, take away the spread, etc. So there's more than enough here to get a decent little return on time invested. However, we would need to see a valid close lower on our 4-hour time frame for this to be a valid entry for further shorts. Longer she fails to break above this level, the more likely is more buying sentiment is going to come in, and then we could see Euro against Euro actually attempting the prior high she's just come from at the 61.8 going into the new week. Sterling on the daily, same like its European counterpart. Prices has attempted a major support and resistance level high in the shape of the 38.2 fib monthly fib level. Prior to going into the new year, we saw Euro making new highs against the US dollar, however failing to break above that monthly fib level. We did see an attempt to breach it recently, just before the new year. However, we had a bearish engulfing candle, and it still closed above 38.2, so still showing positive sentiment. Apologies. However, failing to really get everybody on board on the continuation, and we had a slight little move higher. However, that sentiment not generally there to really kick it onto the upside, and subsequently prices now rolled over. It is now trading below the 38.2 monthly fib level, and as long as she continues to do so, the outcome intraday is more likely to be further consolidation lows, i.e. back towards price support and resistance. In this case, you can quickly see the weekly fib level here at the 23.6 level, which is below us, and that is roughly, as it stands at the moment now, about 135 pips below us. RMO is still above the zero level. The candlesticks are still very much positive, so the sentiment still wants to move higher. However, we're just consolidative at a major monthly fib level high. We would need to see, if this is to be genuine still positive, we would need to see price trading above that as soon as possible. The longer she fails to get above this level, the more likelihoods of negativity is going to start encroaching on our bigger time frames, because that sentiment is just not there to drive it higher. And you can see the indicator box over here primarily red now, and the R-squared is completing one or two areas. We'd like to see if this is to be genuine sentiment higher, lower, apologies, we would need to see the R-squared complementing that on our shorter term time frames. Osimo is below level as we've gone to this consolidation range, so that's all well and good. Drop down to our 4-hour time frame, just move this across. You'll notice that in this consolidation that we've seen in price making lower lows, prices drop below the most important institution moving average. Beforehand we had price trading below, but still candles were blue. However, now because we're trading below the institution, RM has dropped below for the first time in as many months, and you can see now that the candles have gone red. So the sentiment there is still wanting to move lower. However, you can see on the 4-hour time frame, in fact, we haven't seen any genuine directional candles. You can see a lot of candles, a lot of wicks, a lot of trading wicks. However, no true sentiment in those candles, i.e. bearish engulfing candles like we had on the breakout. We would need to see something like that to tell us, great, we had the breakout, the pullback, and now we're seeing a continuation lower. And by doing so, it will then allow us then to tap into what is probably 137 pips to our weekly fib level lower here at 61.79 and change. That would be our ultimate goal, because we're trading now below the institution moving average. We're trading below the monthly fib level. So if she's falling away from a major support and resistance level, she's then going to target the next support and resistance level, which is the low below us. And quite clearly there's probably about 100 pips before we get a nice entry level to that target. US dollar Swiss franc daily, euro making low, so you would expect the US dollar Swiss franc attempting highs. Subsequently, that's what we've seen recently over the past month or so, is the US dollar forging a nice support level here on the 38.2, failing to break this level over a number of months, and in doing so, more positiveness came into the market, and subsequently we had this move higher recently through most of December. However, going into the new year, we saw a pullback after really indifferent non-farm payroll figures. However, positiveness has come back into the market again for the US market after some nice figures recently. But yesterday we had a pullback, quite a sharp pullback after the Wednesday bullish engulfing candle, which attempted the prior support and resistance level, the prior swing level high. Failing to break above that would indicate there's still room for further lows to be made. You can see on this indicator box the long-term sentiment still warrants or favors the downside, but there is no true sentiment in that move lower. You can see the R-squared is not complementing that sentiment. However, intraday we're seeing a lot of positiveness. However, there again we're not seeing any true sentiment on those highs. So we are pretty much seeing a very indifferent chart, a period here of indecision on the US dollar Swiss franc, because the upside is not genuine. It's just potentially just profit taking. If this would be genuine sentiment, we would need to see the R-squared complementing that buying opportunity, and that would then in turn give strength to the US dollar against the Swiss franc and push it higher. Candlesticks, you can quite clearly see on the daily, are still very much red. So the sentiment overall still favors lows. Even though we had a pullback, this is just consolidation or profit taking consolidation, highs, pullbacks. And as long as we trade below the institution moving average, we should still be expecting price to potentially make lower lows, because we are very much in a negative trend. It would only be positive if price was actually trading above the institution and we saw the candlesticks actually changing from red to blue. So here, indecision in the market, end of week. I don't expect price to reattempt these highs today, unless we get some really good data. End of week, we could see price, the market consolidating before the weekend starts. US dollar Japanese yen, same outlook. Price has failed to break a monthly and weekly fib level high here at the 105.65 mark. Price is kind of consolidated at this level. We saw price pulling back sharply towards the weekly fib level 23.6. We did see a break low. However, the price failed to actually use that area, that level, as a resistance level, and subsequently what we saw was a tweezer bottom formation where we had a very bull candle close, cancelling out the lower candle low, forming a nice tweezer bottom, which is a positive candle. Notice the candlestick is still very much blue, so we would still, even though we saw consolidation, we would still be looking for the bias to favor the upsides, and subsequently we saw a lot of buying coming through on the US dollar and forming this tweezer bottom, and over the past couple of days we've seen price edging higher. Not a lot of sentiment. You can see that the OSMO is still very much below the zero level, however the RMO is still quite strong and above. We do have a red arrow, but the candlesticks are still very much wanting to move higher. We have a very indifferent candlestick chart, bit of red, however the positiveness still outweighs the negativity on here. You'll notice that there's a lot of positiveness intraday, however that R squared is not complementing that positive sentiment. So yesterday's candle indecisive, failing to actually close higher than the Wednesday high. So on our 4-hour time frame, you'll clearly see that price, if you take the current high that we saw, which was trading into the monthly and weekly fib level high, you'll notice that prices failed to make any new highs, and subsequently what it's doing is it's forming new swing lows. Okay, so above on the 4-hour, we are above the institution moving average. If this is to be long-term positive, we would need to see the prior high, the swing high, being breached. So we would need to see price trading well above, at least in this case 104.84, to see any opportunities for further highs. In doing so, by the time you do get a genuine candle, you're trading, you got about 53 pips to that level, but by the time we get a genuine candle, it's eating into a lot of your profit, and then you'll be trading a lot more risk because we're trading into a consolidative major support and resistance level high. So here the US dollar would have to be, in my eyes, because I'm more of a passive trader, to be well above, or to get above the 105.50 for me to even contemplate taking any further buying opportunities for this pair. At the moment now, consolidation, you can see price is very much in a consolidative range. You can see a lot of hesitation at this very level where price is trading right now. Prior resistance, prior support, breakout, resistance. So clearly consolidation. I do not want to take this trade primarily because we are trading within a consolidative range, and if there's a consolidative range, there's a lot more speculation. More speculation leads to more risk because people, the traders out there, just aren't coming up with a valid high or lower indication. So this one over here I'm staying away from until the new week. That's it, guys, short and sweet. Have a look and see if there's any news out today that's going to really move the market. We have some news this morning for sterling. We have retail sales a month figure, which is very, very important. Expecting after the festive season, we're expecting a 0.2% rise, expansion. Then we have a member of the MPC speaking, but this afternoon we have a lot of data out for the US market. Building permits, housing starts, industrial production month-to-month figures, and then we have the prelim consumer sentiment indicator figures coming out, as well as the job openings results at 3 p.m. this afternoon. So there's a lot of news out today for the US market yet again. If you are looking to trade end of week, make sure that you are well aware of the news that's coming out this afternoon. So we're going to see a lot of speculation or drive, so a lot of knee-jerk reactions potentially, and as long as you're well aware of it and you're well aware of your money management and the risk, then go ahead with all duress. But just as long as you follow the rules and you keep it as simple as possible, you should be on for a winner. Other than that, have a fantastic weekend with family and friends, and I'll catch you guys first thing on Monday morning. Hope you have a great time. Until then, you guys trade serenely.